this actually could be a trade that you take where remember the parallel lines I had here?
Yep.
So I mean, this would be a great shorting opportunity. I found, and this is kind of where it comes from, the idea to swing trade or to be more of a trader, is that, you know, as you develop and study the charts, you start to see patterns repeating over and over again. And then, you know, when price hits this level, it seems to always do this. On this chart, it could be a stock chart, it could be a currency chart or a commodity chart. And there are things that replicate over and over again. And so for instance, on Bitcoin, it's one of those scenarios where, you know, I noticed very early on over the last couple of years that there's a 4-year cycle, right? So for me, as much as I love the idea of Bitcoin long term, it's like, well, if we know we're coming into a cycle and we have a classic double top, which is a technical term for resistance, why would I be in Bitcoin up there and just hold it knowing that price is going to come down? So it's a very hard kind of thing for me to get over and get to that long-term investor mentality when it's like, well, if I wait a week, I can buy it a lot cheaper. Why wouldn't I do that, right?
Yeah.
So that's kind of where I come from. And in looking at the charts, it's all about price pattern and time. When you're analyzing charts, what you're actually doing is analyzing human emotion. And you might say, you know, this is the weirdest thing ever. How would that be human emotion? Well, remember, charts go up and down by buyers and sellers. So when charts are going up, people are buying. There's more buyers, which is greed starting to perpetuate. Same thing on the downside, fear when sellers and the price is going down. So you're really reading the emotion of the investing world by reading charts. And if you're a psychologist or if you're someone that's into reading human emotion and you understand the counter trend ideas, you can actually do really, really well, even by holding a core position. The time to do it is the time to buy Bitcoin is when everyone else is scared, not when everyone else is saying, hey, it's at 65,000. It's going to be at 100,000 by the end of November. You have to kind of step back and say, wait a minute. I remember in the .com era when this happened and look at what happened there. I remember in 2007 in the stock market, you know, and you look at these historical patterns and it just happens to repeat over and over. And like I said, it repeats because human emotion never changes, right? People are greedy, people are fearful. So it's very cool. The biggest things that I've kind of developed in my service where I do give out trade signals of buying and selling is, number one, it's when I'm ready to put my money on the line, then I'm okay announcing it, because God knows I'm the most careful with my own money, right? So it makes sense that those are going to be the highest reward, lowest risk setups. And I make sure I do these daily videos, and I always say to people, listen, I am going to be wrong from time to time. So never over allocate. So you'll see me putting out signals like I'm in Bitcoin right now. I think we have a 12% of the portfolio position, but like I started accumulating it down here in this 25 to 30,000 range with 2%. And I post that to people. And my hope is that people really take that and say, oh, if Gareth's just dipping his toe in the water, I don't want to leverage myself out 10 times. So position size means everything when you're investing, right? And if people are following me, that's what I really stress to them, because there will be situations where I'm wrong. For instance, in the service, right? Terra Luna was falling, and the chart, I mean, this is one of the rare cases the charts do fail. The chart was like, okay, it's into support around 40 bucks. It had come down from like 80 or 90. So we picked some up. Well, guess what? It obviously didn't stop going down. The best thing about it is I only had a small percentage of my portfolio allocated. So yes, we lost. But again, in the scheme of the portfolio, we're already making money. I think we took money on Polygon already and some of these other ones that did bounce back in the last week or two. So position size is everything. And then one of the biggest things is, because I've done this for 20 years and, you know, mostly in stocks, frankly, but now branching into crypto, and charts are the same in anything, is that you kind of get to this point where you're like, yes, I'm going to be wrong, but I'm wrong 2 times out of every 10. And that's just my average. I'm like a baseball player, and like my average is 80%, which obviously in baseball would be amazing. But in trading, that's what my average is. And so as long as I continue to put out trades at the levels where I'm following the technicals, the rest takes care of itself. In my early years, when I would go into a trade, I would always be like, oh, I'm going to put lots of money in this level here because I know I'm going to be right and I'm going to make $1 million. Well, when you get burned enough, you start to go into trades and say, you know what, I might be wrong here. And like, how do I maneuver if I'm wrong? What do I do? How do I react? Where's my exit strategy, right? And so every trade I go in, even with an 80% success rate, I'm always going in assuming I might lose or be down on the position. And what that does is it changes the metrics to being more cautious and building real wealth through, you know, investing. So when it comes to these, you know, the talking heads, if you will, that are just like, you know, buy Bitcoin at any level. And God knows there's a lot of influencers out there that do that. You know, individual investors, just get educated, right? Understand, you got to educate yourself, and then really just understand that any scenario can be wrong, and it likely will be when you're buying it at crazy highs after a big run. You have a trend line and you break below, and you said you like to short it. So you obviously, once it starts to break, you can't chase it, right? So that's the cardinal sin of investing. I never chase. I want to be buying at the low. Now, it may not be the low tomorrow, but at the time I'm buying it at the low. I'm not waiting for it to bounce 3 days and then saying, oh, let me hop on board, because the risk reward metrics are horrendous. But what you're doing is you're waiting for it to come back up, which now support becomes resistance on the underside, and then you're playing that next wave down. So that's a fantastic trading pattern to play. Bear flags are another great one, which is the breakdown pattern when you get this sideways consolidation, or bull flags. I love double tops, double bottoms. Bitcoin back at 65,000 in October, November, classic M top right there. So there are lots of pattern formations. And what I always try to do is I always say to myself, well, if there's like, let's say this price, which would be like a double top, or a pattern, which would be a bear flag or a bull flag, try to combine a couple. And if you can combine more than one, like get 2 or 3 in alignment, that ups your success rate to like 80+%. And that's the groove, right? So I'm always looking for situations where I have more than one signal telling me that, yes, this is a good buy, or yes, this is a good sell. Yeah, sure. So I love when we talk about charts, right? So we were just talking about bear flags, and this was just a beautiful one. And it's so interesting to watch how sentiment changes. But basically, for those of you out there watching, you can see how you basically had this vertical move down. You know, you had a little bit of choppiness sideways, but for the most part, it was straight down. And then what you did was you started to go sideways to slightly higher. And this is a bearish flag consolidation pattern. And so even when we were up at these highs, there were a lot of people getting bullish, talking about breakouts. I actually was shorting it up here because it was at the upper end. And you can see the beauty of the chart here with the exact high here matches the high here, which matches the high here. And then look at the lows, perfectly parallel line right down here. Now, eventually this pattern breaks down. That's exactly what it did. Now, what's super interesting about this chart is that if we take care, let me remove this. There's a new channel that we hit, and this is a very short-term kind of thing, but this is why I actually bought Bitcoin recently. So you connect these highs. So again, this high right here, and then back to this high. Drop that perfectly parallel line down, and look at what you get here. So now you have a chart on Bitcoin where you just when it was panicking, when UST was failing, when Terra Luna was collapsing, look at where the price of Bitcoin went, and then look at how it started to bounce a little bit. So the thought process for me in the near term is that since you had a big move like this, you had a big move like this, you had a big move when it crossed up here and so forth, it makes sense to think that we should have at least a decent move back here. This actually could be a trade that you take where remember the parallel lines I had here?
Yep.
So this would be a great shorting opportunity if price goes right back there after the breakdown.
Like 38
so that
to
would be
40
just a
grand.
very cool setup potentially. But right now I am long, and as long as this lower trend line holds, that's what the chart's telling me to do. Just be long. And again, not a lot of my portfolio. I'm not leveraging out. I'm not trying to make $1 million overnight. Real wealth is like a marathon. It takes time to build versus a lot of people take $5,000 and they're like, okay, well, how do I turn this into 100,000 by next week? And inevitably you have to take so much risk, you're going to lose it, right? I mean, maybe you win a couple times and then boom. You know, I mean, I think Qcoin is good. I know you don't get the same kind of, you know, if you're in the US, you don't get the same sort of coverage as you do outside of the US, but you can do there. I have accounts at Kraken, Coinbase. I've been looking into Bybit, but I don't think you're allowed at this point. But I've been in contact with them, and they're talking about allowing US customers potentially, eventually, they're going to get approved to be. So, I mean, I don't really have a specific favorite. It's just one thing I will say is that I like to spread my money around. Now, if you have a very small account, it doesn't make sense to do that. But because crypto accounts aren't FDIC insured, I strongly encourage if you have significant money to spread it out, because I had this happen to me, and this was one. I mean, it's one of the craziest scenarios. But someone jacked my SIM card, so I was actually on a family reunion, and all of a sudden my phone stopped working. And luckily, I was like, okay, this is weird. Let me call the phone, you know, the provider. And it turns out someone just like basically became me, switched my SIM over, And then they were getting to password reset. They were getting all the codes to the phone, their phone. And so they got in, there was one account they got into, but luckily I hadn't funded it yet. But it was like a wake up call saying, all right, listen, I mean, if these type of things, I mean, you could click on a link where someone, you know, takes over. I mean, there's so many things. So if you have a significant amount of money, make sure you spread it amongst multiple accounts to protect yourself. I think that, so this is the interesting thing with fundamental analysis, and this applies to stocks, to commodities, as well as cryptocurrency, is that longer term fundamentals mean something. So if you get more people to be using something, if you get more people processing payments or whatever it may be, that's bullish in the longer term. I mean, you need adoption, right? Adoption will eventually create a better system and a bigger price in the crypto. What you have to remember, and this is what people were telling me. So when we were at 65,000, I still remember it vividly. I was in Dubai doing live interviews at the blockchain summit. And it was at 65 and I was like, nah, I hate to say it, guys, but I see Bitcoin heading down to 20. And people were like, oh, but on-chain analysis. And I said, well, yes, in the next couple years, but fear is so much more dominant in the short term. Fear is always the most powerful, just like greed is. So yes, long-term, when fear kind of subsides, that those make sense, fundamental analysis makes sense. But just always remember that greed and fear will dominate in the near term. I do think people have to be careful with the stable coins. I'm no expert in stable coins, but I will admit that I was taking payments for some of our services in Tether. And once the Terra Luna situation happened, I decided to move it out and actually just moved it into Bitcoin. Just because, again, you know, when you see something like that depeg, you just don't know how far it could reach. Is it become systemic, where it just takes down the whole scenario? And ultimately, I am a long-term bull on Bitcoin. So like, let's say Bitcoin at that point drops to 15,000. Well, okay, you know, I don't mind holding it for a year or two until it finally recovers. But yeah, I think people have to just be really careful. Diversification is probably the best thing. And I don't just mean like diversification in crypto, but you need to be diversified. People, you know, last year I was like, you know, gold's a good place to be. And, you know, same thing. Oh, you're crazy. You know, gold's dead. You know, crypto people were like so in. And I'm like, you know, you can be bullish long-term crypto and then still diversify in gold. And here we have gold this year that's only up maybe a few percentage points, maybe 5% on the year. But if you compare it to what Bitcoin's down or what the stock market is down, you look like a genius for being in it, right? And so diversifying, it basically what it does is it smooths out the craziness, right? So when you have an investment here, and all over, when one of the assets gets crushed, it kind of anchors your portfolio. And it's so important. I know people don't like to do it because it means you won't hit a home run. Your portfolio may not double tomorrow or next week or next year. But at the same time, protecting, and especially when we're in this bear market in crypto, protection is the number one thing you have to think about.